Good afternoon, everyone. Welcome. Thank you for joining us today. I'm Greg White. I lead the OC product community, and I established OC product back in 2009 to connect and educate product professionals in Orange County, California. Since then, we've hosted about 130 in-person events, including 6 product camps. This year, in an effort to bring some outstanding voices from outside our area, we started this Product Foundations webinar series. I want to recognize one of the members of my team who is helping run today's session, Cosette Dwyer. You will probably hear her voice. She'll be fielding questions in our Q&A panel. She's one of our board members. Speaking of product camps, we have the father of product camp with us today. Rich Mironov is one of the pioneers of modern product management. Over decades as a product executive and advisor, he has helped product leaders communicate strategy in ways that executives understand through what he calls money stories, connecting product work directly to business impact. He's the founder of the Silicon Valley Product Management Association and the author of 2 books, The Art of Product Management and the newly released Money Stories. While Rich is presenting, feel free to submit questions in the Q&A panel. We'll pick a few to ask during the discussion time at the end. So Rich, thank you for being here, and the floor is yours.
It's my pleasure. So let's switch our pictures here. Make sure this is working. There we are. Okay. And if that came up, we're all good. All right. So thanks. And a quick geographic and clock calendar note here. I actually now live in Portugal. I'm in a suburb of Lisbon. So it's 7 in the evening here. But I'm thrilled to be back on the West Coast virtually, minus 8 hours here. And I really appreciate everybody joining and having a chance to share. So let's jump in. And we're going to talk about a couple of things. One is what I call money stories. And the other one, a subsidiary of that, is really called Earning Our Keep. And all of this is really focused on how we get things done in the executive suite at our companies. I've been a consultant and an interim CPO dozens of times with B2B enterprise companies, so it's really going to have a B2B enterprise flavor for us. Okay, we're ready to go? All right. Let's flip through. By the way, I will send Greg a PDF of the slides when we're done. So no reason for anybody to have to take screenshots. Happy to share that out. Okay, so a little bit more about me. Greg gave me the introduction, but I've been doing product management initially in Silicon Valley since 1988. In case anybody thought product was a new thing, not so much. 6 venture-backed B2B enterprise startups. 4 of those we turn out to file under good life lessons and character building because it's a portfolio and most of them don't work. And since then, one of the things I've been doing is I coach chief product officers, but I've also jumped into companies as the interim or temporary or smoke jumper chief product officer. So I've done 15 of those gigs. Apparently I was a slow learner because I should have figured out earlier they weren't any fun, but here we are. And so these days I'm mostly coaching CPOs and working with executive teams on getting the right things done. So that's me. There's a picture of the new book. I can hold it up for you. Actually, worth showing on the very back for anybody who has the hard copy is a picture of one of my 2 dogs. She's my chief canine officer, and we might just have an interrupt about halfway through our webinar as I run out and get them from somebody who's dropping them off. So if we have a break, I'll give that back to Greg. So pictures of my 2 books, they're easy to find. All right, so let's frame up the discussion here. And something that none of us really want to believe or hear, but we're going to tell it anyway. So let's imagine, or let's remember, because we've all been there, if you've ever been at a social event or a work meeting or some other outing where there's a person in that room with you who really, really, really wants to spend 30 or 40 minutes of your lifetime talking about something that you're completely not interested in, right? And since I'm not a sports fan, I can talk about Lakers versus Celtics. And if you want to spend a half hour telling me about it, I just want to chew my leg and escape because I don't care. Those of us on the Dungeons and Dragons side, We know that most people in the world don't actually care about orcs versus elves and what we did on our last adventure, but somehow we feel this real need to pin people in the corner and talk about it, right? This week, it might be somebody who really follows politics and wants to explain to you at great length all about the primary election results that came in from Texas yesterday, right? The important thing about all those stories is the person talking isn't reading the room and isn't understanding whether the other folks in the room are interested in what they want to share. Why do I start here? Because including myself, every product person I know on the whole planet wants everyone to understand what we do and love what we do and get really interested in the details of how we build product. And it turns out if the folks in the room are the go-to-market executives at your company, sales and marketing and finance and services and whatever, they're really not interested in us describing the details of how things work. They just want to know what it gets done. So the first takeaway in the talk is if you find yourself giving long-winded explanations about product operating models to executives of your company who don't care about it, you're that guy or that gal. So please don't be the person who insists on educating all of the other folks in the room about how smart we are and how we do our work, because most of them simply don't care, right? In fact, I have a couple of quotes here that we always use in our teams, and they make perfect sense, but they get folks really riled up across the revenue aisle when we say them. If anybody's used these words, how about, there's no slack in the engineering plan, our priorities are all set, I'm sorry you can't have what you want, right? When I ask go-to-market execs what they hear when we say those words, they get very angry and they say, clearly these product folks don't understand how the business works. They don't have clear priorities and they don't know how important the thing is that I want. Right now, we know it's impossible, but there you go. A couple more just for the fun of it, right? And I've said this too many times, now I don't say it anymore. It's great that the sales team brought me a little post-it note that has some description of what a customer or user wants, but it's wildly insufficient. So before we can even consider this, we got to go back and do a whole bunch of interviews, right? It's absolutely true. But when our sales team hears this, what they hear is that we think they're incompetent and stupid and can't ask any of the right questions. Maybe not what we wanted to communicate. One more just for the fun of it, right? We're agile, fill out this backlog form. We've all been at a company that has some system where people are supposed to fill out a form so they can get the enhancement they want or the innovation they have in mind. And in almost every one of those systems, either nobody reads it or the chances of it being built are nearly zero. So we've set up a system where other people waste a lot of their energy to not get an answer or be told no. You wouldn't be surprised to find out they're frustrated, right? So coming back to absolute first principles on the product side, one of the very first things that we learn on our first day as product managers is understand what's important to your users, not what's important to you to want the users to care about, right? So let's ask the question of, oh, I'm sorry, we're a little out of order here. So when we say those things, here's my observation in big bold letters. When we talk about generic product processes with the go-to-market side of our companies, they sound like excuses. Right? They are excuses. You can't have what you want because we have 2 week sprints. You can't have what you want because we need to size the work. You can't have what you want because the roadmap's locked. You can't have what you want because we're working on OKRs. Those are all perhaps true, but they don't help our cause at all. So, a thing to think about is when you're dealing with the revenue side of your company, try to avoid generic process descriptions that reinforce the fact that they're not going to get what they want, right? We're going to have some alternatives to that in a sec. Okay, so let's talk about what they do care about, right? What do go-to-market execs care about? And by the way, if we were doing this live, I'd ask for shout-outs in the room because the answers are easy, right? What do they care about? The first thing they care about is short-term revenue, current quarter revenue. You guys may or may not know this, but if your sales team misses the number for the quarter, some of them get fired, right? Customer commitments. If we promise something to a customer by a certain date, that's the line in the sand. No excuses. Don't give me any BS. Don't come back and tell me the engineers thought it was too hard or we lacked specs. If we made a commitment, we have to meet it, right? What else do they care about? On the B2B side, And by the way, for me, enterprise is probably any company where the average deal size is 75,000 or more, right? 100,000, 200,000. The thing about that is, in general, your enterprise company is going to close a small number of big deals this quarter. And not only does the head of sales know the names of all those deals, and the CEO knows the names of all those deals, but every one of your board members knows the names of those deals, right? And so there's tremendous pressure to close the things that are in the pipeline, right? If you're in a mass market consumer thing, you're doing music streaming services at $8 a month, it's usually we're going to talk about churn or retention. Because if we could avoid the next 100,000 folks from dropping our subscription, we could put another $1 million a month on the top line, right? These are things that, in general, everyone on your executive team cares about, especially the people who carry revenue bags, right? We know that there's a third thing coming, which is what don't they care about? I think I've said it already. This is a group that is fundamentally not interested in product processes. Actually, in Europe, we say product processes, but it's the same thing. They don't care about Scrum versus Kanban versus SAFe versus anything else. They really don't viscerally care about tech debt. Customer ease of use and workflows are really handy, especially if they deliver money, right? We tend to talk about the joy and the process and the internal workings of our products. And for this particular audience, it's a miss, right? They're busy reading email on their phone when we're having that discussion. Okay, so take a deep breath, right? So here's by the way, here's the slogan on the back of the book. Anybody know this one? Don't bring a backlog to a gunfight. If you're in the executive suite with a bunch of C-level, V-level folks, don't put up a spreadsheet with 7 columns and 700 rows, right? That's not how we get things done at the executive level. We need quick vignettes and talk about money and how's it going to advance the business. And over again, I, in my earlier days, and the product folks I coach, really want to show our science. And Dr. Sheldon Cooper taught us in the Big Bang Theory that really never works out, right? He needed to be the smartest person at the whiteboard, and it always ended badly. There are other places in your company for you to be smart, right? And to show that you're smarter than everybody else in the room. That's not one of them. Okay, so I've knocked down our sort of fundamental conversational model. We have to fill it with something, okay? So let's go ahead. I'm going to suggest that there's something called money stories. Notice these are not user stories, okay? They're not stories about what the user's going to do. They're stories about how we're going to make money when the user does the thing the user's going to do, right? And I've designed them to be simple enough that even our sales counterparts can understand the math, right? So here's the rules. It's why we should care at the executive level, or more importantly, why the revenue side of the company should care about what we're building and what we're doing. There's swags. Anybody miss that scientific wild ass guess? We're going to make up some numbers here, but they're going to be close enough, and we'll do a bunch. And then the rule says no more than 3 numbers. And the only operator is multiply, because we're trying to get a simple point across and not do fast Fourier transforms or Monte Carlo simulations. Keep that in your back pocket with your team, right? So we're going to do a few of these so you see what they are. I put a tremendous number of examples in the book on the theory that you need to find some examples that are pretty much like your company. And since I don't know your company, I had a whole assortment there. So let's do a couple, right? Let's tell the upsell story. And I'm hoping every single product manager on the planet's told this story, and it goes like this. Let's pretend we're in a tiered pricing structure. We have a bronze, silver, gold subscription level. Here I've called it basic and premium, right? So there's basic customers, there's premium customers, and we've identified a really, really cool feature that will get a bunch of our basic customers to upgrade to the premium version of the product and pay us more money, right? Now, notice right away, I didn't actually tell you what the feature was, because on the money side story, we don't need that. We're going to save that for the user story, right? And the other thing I'm going to notice is that if you're talking to your executives on the revenue, on the go-to-market side, I will claim that they can't hear anything you say unless the sentence includes a currency symbol. They can't hear tech debt. They can't hear architecture, right? You aren't finishing your sentence unless it includes a dollar sign or a pound sign or a euro sign or whatever currency you're in. So we're going to write the rest of the sentence for this upsell story so that our executives can hear and care and get excited, right? The math's really simple. It looks something like this. Well, how many basic customers do we have? And you should probably be able to look that up or have that handy. And what's the incremental price to go from basic to premium? Should be on your price list somewhere. So those two we know. And then we're going to guesstimate a number. That's a hint for saying we're going to make it up, right? And we're going to try to guess a range of what portion of our basic customers are going to do this thing, right? We're going to add some really cool AI feature that tells the future for them and avoids traffic jams and helps them meet the right person to make their life complete. And that's going to cause them to trade up from basic to premium, right? Still haven't finished our sentence because there's no numbers. So let's put a few in. Okay. For whatever reason, I made these up, but we have 30,000 basic customers. And the bump up, the extra price is 90 euros a year to get from basic to premium. And here's where the magic happens. We're going to do a bunch of estimating, and we're going to hope that we think we can get something between 1% and 4% of those basic customers to pay us more money if we do this cool feature, right? And then we multiply, easy to go there. And we're going to discover that we're going to have a range something like 25,000 to 100,000 euros. I'm in euros today because I'm in Europe, but we'll get to dollars in a sec. Which lets you ask some good questions like, is 100,000 euros big in our company? Does anybody care? And what else do we have in the queue that's either much bigger or much smaller than this? And are we excited, right? Because when we put numbers on this, suddenly the executives around the room are paying attention. And they're starting to ask the questions that we need to help them ask to decide if we're going to fund this or not, right? So there's our little red thing. And we know it's a money story because it ends in money, right? By the way, they're all the same. We're going to do a couple, but they're all the same. So if you're telling an upsell story about how something's going to increase customer satisfaction, that's great, but we've got to connect the dots to how increased customer satisfaction leads to revenue or money, right? Okay, I'm going to blaze through this because I think it's pretty obvious. Churn renewal, if you're in the consumer space, usually you're worried about churn, which is the opposite of renewal. And we would say something like, more of our current users would renew their subscriptions if we made the credit card thing easier, or we made the workflow easier, or it was a faster time to get to the joy and the aha, or we did some more advertising, whatever it is, right? We're going to tell a story about the thing we're going to do, but we have to finish the sentence. So it's going to look something like this. Well, how many accounts did we churn last month or last year, last period? And how much does it cost us when one of those accounts churns? And what's our guess, our estimate, our hope, our stab in the sand here for how much churn reduction we can get if we do this thing we're talking about? I was just on with some folks the other day whose registration page has problems accepting credit cards. And it turns out if we could have the registration and re-registration page do a better job of taking credit cards, a lot of people would give us more money, right? And we had to estimate that. But it wasn't enough to say, we're going to fix the page. We had to say, we're going to fix the page and here's where the money goes. So we have 230,000 folks who don't renew every year. I don't know, it's your product, not mine. They would have paid us $400 a year if they renewed. And if we made this change to the UI or the product or the onboarding or the experience, we think that 1% to 4% of those might renew where they're canceling today. And we do the multiplication and suddenly, gosh, 1 to 4 million. Everybody in the executive room just sat up and listened, because maybe at this company, 1 to 4 million is important. And we're willing to put a lot of things aside that are smaller than that because we've got their attention, right? We're speaking the language of money. We're speaking the language of business. We're speaking the language of the future, which is hard to predict, right? But a money story here tells us that the business is going to care, right? Let's do one more maybe. Okay, I think we have one more here. All right, transaction volume. A lot of us in our businesses where we sell per thing. We're in the travel business and we make money every time somebody books a hotel or an airline seat. We're in the online book selling business. We make money every time somebody buys a book. We're in the online stock brokerage and trading world. So we make money every time somebody buys or sells a stock or an ETF or a Bitcoin, right? So if we're in the transaction volume business, we want to tell a story that says, gosh, this really new feature will get our users to buy more or consume more, right? Use up their tokens, right? Buy more units. And the math is really simple. How many did we sell last year or last period, last quarter? What's our margin per unit? Because usually in these businesses, we don't get to keep all the money. We get some slice. And then if this really cool new feature, we're going to do something really neat. If we had some predictive AI engine that helped our stock trading customers get a better sense of the market, we would increase volume by some percentage. Right? You see, these are all the same. We did 180 million stock trades last year. We made $3 a piece. I don't know why, that's really expensive. We think this might have a lift of well under 0.5%, but do the math and we're in the large hundreds of thousands to small millions range. That's probably enough to get somebody's attention to fund a project or keep it on the roadmap or not blow it up next week when they got a phone call for something else, right? We're speaking the language of power and money here. Okay, I'm going to catch my breath here. And are there any hot questions in the queue that I need to take before I move on?
I'm not seeing
No?
any.
Okay, it's a little hard when I can't see people's faces, so we're
Yeah.
going to keep going. When we get past the slides, I'll open it up. I'll be able to see folks' faces again. Okay, so let's keep going. So the theory here I'm applying is something I call count the digits. Okay, and it's not actually important to know the difference between 200,000, 400,000, and 600,000. We can't predict the future that accurately. What's really important is to look at some idea or suggestion or interrupt, and in 3 minutes or less be able to say, I think that's a 4-digit idea. It's worth a few $1,000s per year to the company. Or it's a 6-digit idea. It's worth a few hundreds of thousands of dollars or euros, whatever we're counting. Or it's an 8-digit idea and it might be worth tens of millions. And you really have my attention and let's go size it, right? Because I know that every product manager gets 6 or 20 or 105 requests every single day, almost all of which we're never, ever, ever going to do or size or spend any time on. But you can't just tell people that you're ignoring their ideas. What we want to do is we want to spend a couple minutes or less, thumb in the air, figuring out if this is a 4, 5, 6, or 7-digit idea. And if it's a 4 or 5 or 6-digit idea, and our roadmap is full of 7-digit things, we're not going to bump aside the things we already planned unless somebody can show us more of a business case or we can find something there, right? So this is a tool, by the way, that all of your executives understand. And it's a much more polite thing than saying, you're ugly and you're wearing funny clothing and you didn't fill out the ticket in the right syntax, so we're not doing the thing you want, right? That's an insult and it's not helpful. So counting the digits is a skill we all need to learn, because as things fall from the sky during the day, you want to bat away, you want to put to death most of the really small ones so you can keep your attention on what matters, right? Really handy. Take some practice. I find that the first 5 or 6 of these we do take 15 minutes a piece. After that, they're down to 2 or 3 minutes. And they're a much more helpful organizational way of saying, yeah, I'm putting your thing in the backlog in position 940, but don't ever expect it to see the light of day. All right, let's keep going. All right, so this lets us do something I call shifting the conversation, which is, and the scenario here, I'll just give it to you. Let's imagine that we're rebuilding our whole back-end platform so we can enable a bunch of new products. It was going to be a 6-month project. We're in month 11 already, and it's not nearly done. And sales keeps popping up opportunities for us to take all our developers off of the platform for just 1 week here, just 1 week there, to do a thing that's going to close a sale this quarter and saddle us with tremendous amounts of tech debt going forward. And at this rate, we're really never going to finish our platform. And each time this happens, traditionally what we've said in the executive suite is something like this. Well, okay, we could pull the platform team off to do whatever new shiny thing that you got off the phone from JP Morgan Chase and they said they'll write us a contract for. But if we do that, the platform's going to slip again, right? Notice what I didn't do. I didn't finish the sentence. So this lands with no impact because there's revenue on the table, and executive teams as a whole will always choose the revenue instead of the architecture if we let them. So if we've done our money stories, if we did our work before we started the platform, we might be able to say something stronger like this. We've all agreed, and you've forgotten, but I'm going to remind you again and again, we've all agreed that the new platform is going to turn on an opportunity for something on the order of $10 to $25 million worth of new products next year. So I think if we delay it a quarter, I'm no math whiz, I'll let the sales folks tell me. I think if we delay this a quarter, we're going to be throwing $3 to $6 million on the floor. And that doesn't help our executive team IPO and retire to Fiji faster, right? So what we're setting up here is a better discussion because the $600,000 deal or the $60,000 deal turns out to be smaller than 3 to 6 million a quarter. And instead of them telling us to just do more and be more efficient and stay late on the weekends, we have an argument about which ones are bigger. And everybody in the executive team knows whether 6 million is bigger than 600,000, I can assure you. And now we're having the discussion about business priorities instead of engineering efficiencies, which is really where we need to do. Okay, two last things, and I'm going to cut ourselves over to Q&A. There's an idea I have here that's in the book. I call it earning our keep. It's really simple. It goes like this. Your executives are expecting a multiple of your engineering team's cost to come back as revenue, right? You can figure out what your development team costs. In the US, a development team is usually about $1 million a year. Other parts of the world, it's less expensive. But you could find out in a second by going down to finance or HR and figuring out what your average cost per person is, right? Most companies have a ratio that they're trying to get here. Middle to late stage venture investors are looking for probably something like 6x or 7x return on every dollar we spend on developing product and R&D. So if we spend $1 million a year building this product, the finance folks and the investors are expecting us to deliver order of 6 million in revenue against our product. 5, 7, find out what the number is in your company. It's not that hard to locate. And if you and your product are earning 6x or better, you are earning your keep. And if you're earning 2x or 1x or 3.25x, you may be subject to summary execution. Okay? Products that don't earn their keep get canceled. Right? And if you don't know how much money is coming in on your product, you're at a big disadvantage. And if you don't know what the ratio is that your company uses, you're at a huge disadvantage. Because as a product leader, I want to be able to go into the executive suite and say, I know our number is 6x. Our product suite's actually earning 8.5x. So why don't you not help me any more than you need to, because we're doing our job and we're making good decisions. And we really don't need your assistance right now. If I come in and say we're earning 1.5x on our products, well, the mean time between replacing chief product officers is pretty short in that scenario. All right, so just closing that thought out, this is not about the numbers, this is about trust, okay? And the executive team really wants to trust us and our engineering and our design partners to do a good job, and they're not interested in the details as long as we deliver the money. And so the question that's really in their heads when they ask us about portfolio level or product level ROA is not a math question. It's a trust question. And here's what's really in their heads. Should we continue to invest in your product? Should we see that you're making good decisions? Do you need us to come down every day and micromanage you and sit in your Scrum meetings and rearrange your backlogs and your roadmaps? Nobody wants that. But if you're not bringing in the money, then we may need to provide a lot of extra help here, right? Okay, so another way to say that is add up the revenue for your product set, depending on what level you're at, right? And then divide it by your team cost, which is usually how many people times average headcount, right? And you're going to get your earning your keep ratio. And if it's above the threshold, life is good. If it's below, well, you guys all read the news from Block this week. Not so good, right? So this is all an effort not to change the way we build products, but to change the way we talk about those products with the folks who aren't interested in the details, in the inside baseball. So quick summary here, right? There's some numbers, they don't matter, right? Here's my 3 takeaways, right? When you're talking with go-to-market executives, talk about money and business outcomes, because they're mostly not interested in how we're doing our jobs, even though we want them to love us. It's not why we're there. And in general, in those discussions, order of magnitude's plenty good enough. If you can get to the right number of digits, it almost doesn't matter what the leading number is, and you certainly don't need 2 decimal places, right? Things that are 6 digits are smaller than things that are 7 digits mostly, and that's good enough. And then when you hear about ROI, I want you to think first about trust, not about computational algorithmic spreadsheets. Most of the executives are looking at, how many digits and what's the leading number, and that's good enough. Okay, here's, for those of you who've ever been to Portugal, this is how we say thank you in Portuguese. And that's my new phone number. And but my other handles don't change as I move from continent to continent. All right, so I'm going to stop sharing if I can figure out how to do that.
We have a couple questions.
Okay.
One, I'm going to paraphrase a little bit. What are your thoughts on doing a low, medium, high analysis when guesstimating cost or impact?
First of all, I never estimated cost here, right? My general assumption is that we're getting too many ideas to bother running past engineering for lots and lots of sizing before we decide it's important. Low, medium, high is fine, but low, medium, and high don't directly translate into money unless we have an agreement about what low, medium, and high mean. So if we said low was 4 digits and medium was 5 digits and high was 6 or 7 digits, I'm with you. But L, H, and M on spreadsheets don't win arguments with execs. And by the way, one other thought there, everybody in the product side is uncomfortable predicting the future and making up numbers and talking about things we're not going to have for a year. It's required. It's part of the job. Get used to it.
Everybody should be able to at least run a pro forma.
Pro forma, a simple one, really simple. How much money are we bringing in and how many units is it?
Yep. Next question is from Nino. How do you create a money story for a platform initiative, not feature specific?
Well, let me break that down a little bit, because there's some platforms that are platforms and there's some that are not, right? So I would say you have a platform if you've got at least 3 groups, either internal to the company or external to the company, that are going to use it probably to make money, right? To ship products. If you have a platform that has only one internal customer, you've simply divided your engineering problem in half, right? And it's much, much harder to track revenue through the products that you're enabling and then back through your platform. It's absolutely harder, but it's not impossible. So let's make up a little bit here. I don't know your situation. I won't ask because I'm sure it's confidential, but let's imagine you've got 4 different product groups that are all using your platform, and they have a different priority list, each of them, for what they want you to build next. New features, new APIs, whatever, right? We could just say, well, whoever screams the loudest gets what they want, or whoever has the most executive support gets what they want. But then we've walked away from the economics. So let's ask a different question. Let's ask the product managers at our consuming internal groups to make a case to us why we should do the things they want, right? They each have their own list. And we're going to ask them to attach a money story to each of those, even though it's vague and broad. And we're going to look across those and say, well, which features or which improvements on the platform are going to drive enough collective money across our 3 or 4 consuming technology groups, right? Or product groups. Because our job isn't just to ship new APIs and features. Our job is to enable revenue for the company, among other things. And if 3 of those groups have really good money stories, which collectively add up to a bunch of money for the company, and maybe that's even bigger than the 4th group's story, then we're going to get to take some credit for that. And you'll argue politically what that is. I might say it's a quarter or whatever it is, but we're going to stand up and say we are helping enable 500,000 or 5 million or 500 million in new revenue or improvements because the folks who are using our extended platform and the cool stuff we're building are going to bring money into the company. Because if they're not willing to sign up for that, then maybe we shouldn't do what they asked. Right? Now, the other half of what we do on the platform is to keep it healthy and to keep it running and the lights on and secure and scalable. And we can't slough that off on anybody, and we don't tell money stories for that. There's a whole section in the book about that. But when we're getting beaten up because 4 different internal groups and maybe an external group want different things, well, we've got to stick to. We get to decide what we're going to work on. And we should probably throw some economics and some money in there and not just do it on technical architecture beauty. Now, that's hard. I don't pretend to make it easy, but the alternative is simply to go with the flow and build whatever people tell us to do. And then we don't get the resources and the people and the respect because nobody can see how what we're doing contributes to the top line.
And also, if we're doing whatever everybody wants us to do, we're not taking a portfolio perspective and looking at them all relative to each other. We're just following orders or following requests. And as a product leader, you're probably going to be out of a job because the things that you're doing aren't vetted and aren't necessarily the best things to be doing.
Sure, right. Understand. One other thought before we go away, which is I know that every product manager has a demand and request list that's about 25 times their annual throughput of their team, right? We will never get to the bottom 92% of the things in the backlog, ever, ever, ever. And things are being added on faster than we're taking them off. So we have to make choices. Right? We're going to pick the 3 things to do and let the 94 of the other ones go. And we need some basis for that. If you aren't factoring any economics in there, then you're basing it on something else, right? Somebody's making a decision on some criteria, right? And it might as well be what the company cares about.
We're at the end of our questions. I'd like to invite the attendees to throw some more in there, but I've got one for you, Rich, and we talked about this in the pregame. Your take on AI?
It's coming. It's big. It's huge. Let's divide up the question a little bit because that's as big as the universe. First of all, I think there's a lot of really, really good AI tools out there that people are finding add a lot of throughput or productivity to their days. So let's not pretend they're fake. Every single product manager is going to have to know how to use some of those tools by the end of this year or early next year, or you're doing another job. On the other hand, I also know that there's not enough revenue in the entire universe to justify the company valuations of the 100 biggest AI companies. They're all running at a loss. They're all giving away stuff in the hopes of getting market share. They're burning money, and there's not enough revenue from the rest of the world to support their valuation. So I just know, based on the economics, that there'll be a major downturn later this year where investors run in the other direction because they can't make that work, right? So we're going to see another cycle of boom bust, and some of those companies are going to survive and most of them won't, right? And the third thing I would say is, if you see your product management job as making engineering go faster and writing tickets, then you're going to get replaced by AI, right? If you see your product management job as understanding your users and finding interesting niches and having product strategies that play better than the competition does and finding opportunities through really, really good interviewing, then you're going to use these tools and get more efficient and keep your product management job. It's really important that we remember how product managers add value. And we don't do it by whipping our engineers and making them work weekends, right? We do it by building fewer wasted things, because you never get those cycles back, and having more things come out of the pipeline that might actually succeed in the market. I expect also later this year, we're going to see 100,000 AI slop products shipped that we skipped all the steps. We did no discovery. We didn't think about pricing or marketing or positioning. But because we could build a bunch of new products, we did, right? And there aren't enough customers out there to even look at all these new products. So almost all of them are going to die on the vine because development won't be the long tent pole. It'll be figuring out what people are going to pay for and need. And we always skip this step and we go right to developing because the tools are better. But we're going to see thousands and thousands of products get to the market and fail within the first week because nobody did their product homework. They just did their engineering homework. So, we're going to ride this wave. It's going to be pretty choppy for the next 2 or 3 or 4 quarters. But if we really focus on how we add value and what we do that's important, we'll use these new AI tools to build better products instead of just build faster products.
Another question, thoughtful question that could be a whole separate webinar. Aparna asks, what in the Art of Product Management book is still relevant today and what is not?
Well, as an author, I would tell you it's all important. I think, the first edition of that came out almost 20 years ago, right? So anything there that talks about technology is old, but I think the things that are still true in there are that we bring our hearts and our best selves to the office every day, and we fight for our users, and we fight for our teams, and we fight for the economic health of our companies every day, or we shouldn't come to work. And we are really connectors and organizational thinkers, not just ticket writers, right? There's a whole bunch of things in that book that talk about parenting as a model for product management. Oh, I can tell this story. We have a minute, right? So when I wrote a post when my daughter, I think, was 6, right? She's in her 30s now. And it was about how if you're going to raise a product to grow up and to be big and strong and win in the marketplace and play the violin on stage and whatever it's going to do, you've got to have a plan that's got 18 releases in it because that's how long it takes to become a hit, right? Just the way when you're raising kids, very few of them can do higher level math as 2-year-olds, right? Or run the baseball fields. So I think that what we do as product managers is so much like raising children or looking after pets, because the glory is not for us, the glory is for the product, right? And we're always trying to protect our products and our teams from the randomness of the universe so that our products can grow up to be big and strong and go out and succeed. And V1.0 is never very good. So we've got to have a plan to get to V3.6 or 4.5 when we get really, really proud of it. And everybody tells us, well, they don't tell us, they tell sales how wonderful the product is. And our hearts beat faster because we were there at the birth.
Another question, how does compliance factor into money stories?
Compliance is hard in the same way that security is hard and scalability is hard. One of the things that I lay out in the book is I think about half of our R&D budget, however we want to, let's say, engineer hours or story points or whatever we're doing, is for things that the revenue side of the company doesn't care about. They don't really care about security until we get hacked. They don't really care about scalability until we run out of reporting headroom. They don't really care about compliance until we get sued or embarrassed in public, right? But we as product folks and our engineering and design partners have to set aside about half of all the work we do to keep, I call it care and feeding, right? If we don't do that, it all falls apart in a couple of quarters. We all lose our jobs anyway. But if we present to the head of revenue, the chief sales officer, the choice between closing the next deal and doing a bunch of compliance and scalability and security work, they're always going to choose the short-term money. So we, as good stewards of our products and our resources and our organizations, have to do a little shuffle here where we get agreement to set aside about half of our budget for the things that we must do, but that aren't short-term and aren't easy. So I put UI improvements in there. I put data cleanliness in there, all the things that we know we have to do. But when we talk about it in public with the revenue folks, they neither understand nor care and tell us to throw them all out of the roadmap just for this 1 week. Next week, they tell us the same thing. So we have to defend the half of the budget that lets us ship great products, even in the face of people who aren't that interested. And I think that's part of the chief product officer's job. Really hard to defend at the IC product manager level.
Yep. But if you don't do those things, you're not going to be in business.
Oh, no. And the idea that we're going to outsource all of our support to AI, I haven't seen it yet. Particularly since we've all embedded business logic in the early days in ways that are really uncomfortable. And when we lose the key person who understands how the system works, we have trouble fixing it.
All right. Well, we're getting close to time.
Okay. All right.
There was a question about why you moved to Portugal. I'll let you decide if you want to answer that or not.
Yeah, that's really not what we're going to talk about here. Anybody who wants to know, they can reach out separately. I will tell you that Portugal's a wonderful place, and the food is great, and the people are lovely, and it's really calm and quiet here. And if, like me, you have a chance to rent a place that's 9 blocks from the Atlantic Ocean, then you can get up really early in the morning and take your 50-pound sheepadoodle down to the beach and throw the tennis ball when nobody else is around and watch the sun come up. And it's really good for your blood pressure.
Yeah. Well, a lot of people on this are from Orange County, and we do have that luxury. Maybe not 9 blocks, but
well, sure,
we can take the dog down to the beach during the morning.
You bet.
Condolences to the people who are shoveling snow.
Well, everybody makes their choices, right?
All right. Well, Steve, I appreciate you so much for coming on and sharing your thoughts. And everyone, go out and get Steve's book. It's
you want to advertise Steve's book in a minute. You're looking at my book right now. That's
Steve's
right.
Book is coming next.
Steve's book is coming next. Here's my book. It's really skinny. It's only 88 pages, including the footnotes, which you don't have to read. So it's a quick read, but I think it's really useful. And I think there's a really strong correlation between folks who can tell money stories and folks who get promoted. All right, I'm going to leave you there. I got to go pick up my dogs.
Go get your dogs. Thanks, Rich. We're not done here. Thanks.
I'll
everyone,
let you continue.
See you, Rich. For those of you who are attending, I need to share something. Let's see, back to that. All right. So I did do a little bit of a Freudian slip. Hopefully you can see this. The next webinar is coming up in our Product Foundation series. Steve Johnson will be up in 2 weeks talking about product management chaos. We've got a QR code on there. So registration is open. So if you are available and so inclined, we'd love to see you again. I'm going to leave it at that. And we appreciate you coming and joining us today. And hopefully we'll see you in 2 weeks.